I help business owners that are earning 7 to 9 figures per year save hundreds, if not millions of dollars every year just by investing in our mobile home parks. Why is that? Generally, they run an S Corp and the spouse doesn't work. These are high net worth earners, and so they've accumulated some real estate over their lives, specifically investment properties. Now, because the spouse doesn't work, they qualify their spouse as a real estate professional. And we talk a lot about that, and I'm happy to go through that in more details. But what that means is they check a box on the tax form that now turns all of passive losses, meaning any depreciation that you receive on a K1 by investing in highly depreciable real estate asset class, such as mobile home parks, and they utilize that depreciation against their active income, whether it's from their stock portfolio, it's from their S Corp, it's from selling or buying real estate. Really, the limits are endless. The way that they do this is that generally they're placing about $500 to $1 million per year into our deals that are producing a 5 to 6% starting cash on cash, to which they're not paying taxes on that cash flow, and I explain later why. They're utilizing the year one depreciation that filters through on their K1 that they give their CPA, and let's just say they put in $1 million, they're getting between 1 to 1.3 million of losses, paper losses, year one, that they're then going and handing to their CPA. And if you're getting taxed at a federal rate of 37%, they're saving on that $1 million, $370,000 per year on their taxes. Now, how are they not paying taxes on the cash flow that they're receiving from the properties that we own and manage? When you invest equity, let's just say $1 million into one of our real estate properties, the way we structure it purely from a tax perspective is a return of capital. That doesn't mean that we're paying you back with our capital, it just means that the state and federal tax agencies look at it as you haven't received that $1 million at risk back yet. So it's tax deferred. Now this is all great, but if you invest in an operator that does all of this, but then sells it in 5 years and doesn't 1031 exchange, they're gonna hand you back a tax bill, meaning that $370,000 that you save in year one, you have to then go and pay those taxes back. It's the deferral game. Now this is where things get interesting, and we've been doing this for 17 years. Every time we sell a deal, we elect to do a 1031 exchange for the entire partnership, to which this business owner that invested $1 million would be included in that. Now they always have the option to take their money and run, and they would have the tax consequences with that. Or they can do what we always do, and we do the 1031 exchange. Now that $1 million, let's say, is worth $2 million now. We 1031 exchange, roll it into another deal. Let's just say it's paying 5%. You've doubled your cash on cash. You pay no taxes, and you kept all that money working hard for you. Now this is how everyone is doing it. That is basically keeping more money in their pockets, investing in real estate. This is your retirement. You have your business, and hopefully you have one of your kids that takes it over, or you could eventually sell it, but this is your retirement plan. You're saving 37% on every dollar you're investing per year. You're compounding passive cash flow that's paying you every month. You're growing your net worth, keeping more money in your pocket, not paying the federal taxes, not because you're doing anything wrong or tax evasion, it's just how the IRS code is written. This is the most tax efficient way for high net worth business owners to unlock the full IRS code and start building and compounding a real estate book that's going to take forward into retirement, that's going to be your passive cash flow that you're going to live off of, while reducing your taxes tremendously. You don't need to go buy the brand new fancy truck. You don't need to go buy the jet. Invest smart, invest in cash flowing, producing tax efficient investments like mobile home parks. And then one day you'll wake up and you'll have all this money in real estate that you can pass away. Your kids get a step up in basis. You can hand over all of this net worth tax-free to your heirs. And this is the name of the game. If you want to learn more about this strategy and dive deep and talk about your specific situation, or just learn how other business owners are taking advantage of this, join the Investor Circle, where we go deep on these subjects, and you can get all the information you need. That way you can go back to your CPA and start asking the right questions so they can start working for you instead of the other way around.